Hi there, I want to ask you a question. Do you think that retail stores and retail shops in the high street are dead? Do you think it's a dying business? Is it over? Well, I don't think so. I would say no. And I want to tell you today why I think retail in the high street is very much alive and still has a future if it's done correctly. My name is Charles Kelly. I'm the author of the book, Yes, Money Can Buy You Happiness, and soon to launch a new book, so watch out for that. And I've produced over 300 podcasts. So if you see this on whatever channel you're watching, please like, subscribe, and share it out there in the universe so more people get hold of this free content. I do appreciate that. I can't always thank everybody because I don't always know who's sharing and where it's going, but thank you if you are doing that for me. I really do appreciate that. Right, so High Street. Well, it's gone through a tough time, hasn't it? We've seen lots of stores in the UK closing down. Big stores like Debenhams, Maplin's, national stores. Gap have closed all their retail stores. And we've seen a bit of a bloodbath in the last couple of years, not just because of the lockdowns, but this has kind of been coming for a while. And, we've seen hundreds of stores, but I still think there's a place for retail and physical shops for many years to come. Now, even with the rise of Amazon and other online retailers, obviously, did you know that over 85% of retail, 85% of stuff that's bought in the UK is still made offline? It's still done by going in the high street. And that's still the case even with the lockdown situation. And also another thing is that 20% of stores, or over 20% of store owners, are not even engaging online. So there is a gap there in the market. They need to, if you're in that sort of situation, you're not engaging with your customers online, then contact me because I'll help you get yourself online and get yourself engaging with the potential millions of customers out there that you're not seeing walking in and out of your door or walking down the street. Now, in a strange twist here, we see stores like, companies like Amazon, the online retail giant, the biggest online retailer in the world, are actually opening offline physical stores in the high street. Doesn't that seem strange? And Apple, Apple doesn't need a shop really, does it? But I'm sure they make a lot of money from their stock. They've got huge flagship stores. I mean, multi-million-pound stores. It must have cost millions just to refit those stores with glass floors and fabulous stores in London. And they've got two in London, very near to each other, and most other cities and malls, major malls, would have an Apple store, and that's like a hub of that place. They get people in. A lot of people go in there, don't even buy anything. They just charge their phone or look around or touch the products and that sort of thing. They've changed the way retail is done, Apple, but of course they've got their customer base already. Now, in another move, online retailers like Gymshark and the Fashion Bible are set to open large stores in the high street, bricks and mortar shops in prime retail space next year. Now there's another twist. Gymshark, which only started about 10 years ago, completely online, started as an online retailer, completely online, is opening an 18,000 square foot store in London's Regent Street, which is one of the most expensive retail places and sought after retail places in the country, if not in the world. And just down the road, in Oxford Street, we see that London's luxury department store group, Selfridges, you may have seen that in London, is now being sold to the Thai conglomerate for $4 billion. Now, Selfridges is a fabulous store. I've been using that store for years, since I was a child. I love that store. It's got something special about it. It's a bit like Harrods, but not in Knightsbridge. It's a few miles away in Oxford Street, which is a sort of busier, perhaps slightly less upmarket retailer than Harrods, but still an iconic store. I mean, you see it in Oxford Street, in the prime place between Marble Arch and Bond Street. I mean, it takes up a whole block. It's a huge big block of a building that's got basements. It's got multiple floors. I remember when I was working in the area years ago. I'll tell you a quick story to digress slightly. Is that someone I knew that worked there said, do you know they have a great staff canteen which serves proper food at lunchtime, and if you know the way up there, you can just go in there. They're not going to sort of ask any questions. And for quite a while I was going in there and eating in the staff canteen, which was called subsidised prices, great food, and nobody bothered me. And then they started finding out that they had something like, I think, 4,000 staff, and they were serving 5,000 meals a day. And I thought, something's going wrong here. So they started asking for passes and that sort of. I mean, you couldn't do that thing nowadays, but it was just a funny thing. I mean, I wasn't ripping them off or anything. I was just going and enjoying their food. I was a customer of theirs as well. But that's the kind of place they are. And I love the wine shop they used to have there, which I think is gone now, but you could sort of sit in this wine store and look over the floor, the ground floor, on this sort of mezzanine floor. Always loved Selfridges. But it's been owned by a family and for many years, and are now selling it off. But this company's not only got the Oxford Street store, but they've got 25 outlets, including branches in Dublin, Netherlands and Canada. So it's an iconic store founded in 1908 by the US retail magnate called Gordon Selfridge, funny enough, and it was featured in a TV drama on ITV a couple of years back. Now, the current owners are the billionaire Weston family, agreed the sale terms with the Central Group, according to the Times and the BBC. So that's another thumbs up, really, for retail. They don't think it's dead, do they? They're investing $4 billion in UK retail stores. Now, the Central Group is a group started in Bangkok in 1956, and it's still a family-owned group. And the business has been taken global by the Sun's owner, Samrit. I can't even pronounce the name, but it now boasts 3,700 shops around the world, from supermarkets to electronic outlets and department stores in Europe. Strange enough, I don't know the company, I've never heard of them, but 3,700 shops. And they're obviously not pulling back, are they? They're going for it. They're now investing $4 billion in the Selfridges group. And they've changed a lot, Selfridges. I mean, in the past, much of the clothing they sold, I mean, because it is mainly clothing in department stores, but much of the clothing stores was Selfridges' own brand. You could buy a Selfridges own, you look in the label, it was Selfridges or Harrods, it was own brand stuff, and it was very good stuff as well. But now they're mainly a space for outlets. So if you go in there now, you'll see Hugo Boss, you'll see Cerruti and Gucci, and they rent space in the store. So it's a massive, really, rental business now. They just rent space to the store. So you'll see all the gym wear won't be Selfridges gym wear. It will be somebody else, maybe Gymsharks or whatever. But that has changed. But they're still doing very well as a company. It's very much a hub in that part of Oxford Street, and people go there to eat, and the lovely food stores as well. So it's interesting that it's a big thumbs up for retail. And, I just wonder now how Amazon and Gymshark and the Fashion Bible will succeed and prosper where the likes of Debenhams have died after over 100 years of trading. Well, the answer, I think, is twofold. I mean, firstly, companies like Debenhams and other stores like Gap and House of Fraser had kind of lost their way in the past few years. They literally kind of fallen behind with the times, failed to stay current, and things happen like that in mature businesses. We see businesses grow and then gradually decline, sometimes because of family things, like the generational thing of a family. But I don't know what it is, but somehow they'd fallen behind, and I just think that they hadn't kept up with the times, and they certainly hadn't adapted to online retail, and that's for sure. Now, secondly, and more importantly, these online retailers like Amazon have a massive advantage over a traditional bricks and mortar shop. And that is, of course, that they know their customers. They know everything about their customers. I mean, Amazon knows everything about its customers, like me. They know what I'm looking for. They know what I might rebuy and repurchase. And that, whereas most shops I walk in and out of know nothing about me, absolutely nothing. I was in the shop today, walked in, said, here's your money, do you want a bag? No, all right. And that's it. And they're not asking me to sign up for anything, to sign up for a free card. They're not asking. All they know about me is that the only transaction they've got record about me is the card transaction, and that's it. They have a lot of people walking in and out of this little store, but they and it's not a little store, by the way. It's a big national chain of card. It's a card factory, but they never sort of ask for a loyalty thing, or would you like to get this for that if you sign up for this, or just get this loyalty card. Nothing. It's crazy. Even some of the coffee stores, they have a loyalty card, but it's just a piece of paper that they stamp every time you use the coffee place, or you buy a coffee, you buy 10, you get one free. I think other places like Costa and Starbucks have a more sophisticated approach to that, but a lot of the stores know nothing about me. And unless these stores change their ways and start engaging with their customers, and of course potential customers, people that are not even buying from them at the moment, they're going to face a tough time ahead. There's no doubt about it. And but those who adapt, like Argos, for instance, is a very successful kind of warehouse store where you used to go in and open a catalogue, and you could take away the catalogues, and kids loved looking at the catalogues and what toys they wanted to buy and that sort of thing. A lovely concept, been going for years, but they've adapted now. I think they might still have a paper-based catalogue, but when you go in there, they used to have counters with catalogues, and you'd file through them and that sort of thing, flip through them, and see if you can get to the product you want. Now they're all screens. They're all little sort of iPad-type screens where you press the button and search for stuff. So they've changed, and now a lot of their stuff is done online. So you go online. I don't think their website is great, by the way, but you can go online, pick what you want, check out and pick it up at the store or get it delivered. Next is the same. They combine online with offline sales. You can go online with Next. You can go to the store, try it on. It's a clothing retailer in case you don't know them. And if you don't like it, you give it back to the staff there and then. You haven't have to post it back or anything. And a lot of people like that. It's been working very, very well. And they're not the only ones. There's other stores who work like that, and they are prospering, and they will survive and thrive in the business because it's a big war out there. Everybody wants our money. So if you're a retailer, a business owner, and you're not online at the moment, or perhaps you've got a static website that doesn't do anything for you, contact me and we'll look at some ideas as how you can increase your business online and combine it with online and offline and get more people walking in your door. Because certainly if you just sit there and wait for customers to walk in, I don't think it's going to work in this market. Traditional advertising like the local papers, that's kind of dying a death now. So you've got to look at social media. You've got to look at new ideas to get people walking in the door. And I do see a lot of high street shops opening and then closing because they've just got no idea how to get people through the door. One local fish and chip shop opened up in the last few months. It's gone, closed, kaput. They've got 5 stores. And you have to say that other places are thriving and doing well and some are not. And so it's not just all about high street is dead. It's not. It's changing. You have to adapt. High street will change. For instance, some of the stores in Oxford Street are adapting their model. They're not having 5 floors of retail. They're perhaps having 2 or 3 floors of retail and then flats above. And I know a surveyor that works in the West End, and he said none of his clients defaulted on their rents during the lockdown period. They've all paid their rents, and many are and this includes some offices as well. I know we've seen some offices close, but this includes offices. This is in the prime area of London, Mayfair and Knightsbridge and Belgravia. You don't see many places closed down in these areas anyway. I know they're having a hard time, but they're adapting to the new market. They're selling off space for apartments and luxury apartments, and so they will adapt and they will survive. I'm sure business people in the UK are very innovative, and they will turn things around and survive, whether it's Brexit, lockdown or whatever, they will do. Now, other news, average house prices have continued to rise. The annual growth of an average home in the UK rose slightly to 10% in November, year on year to November, not in 1 month, but this is a year on year average growth, still growing at 10%, and that's up slightly from 9.9% on the previous year. This is according to nationwide building society figures, and as I said before, we'll see other figures like from the Halifax and that sort of thing, but it shows that the market is still going up slightly, even as we're coming into winter. We'll have to see what happens during the winter. There's a free property web class, by the way, you can join. Click on the link below if you're interested in that. Other news is that stock markets are still choppy, they're still volatile as new COVID variant restrictions are introduced. We've seen a few government announcements this week, some more briefings in Downing Street with the Prime Minister there, the men in grey suits, the scientists that have suddenly become celebrities, telling us that we have to do this or that. I won't go into whole detail about it, but it shows that business could slow down as a result of it. They haven't locked down in the UK, but in other countries they have. Germany's introducing big restrictions. Austria's introducing big restrictions. Greece is going to fine people for not getting vaccinated, €100 a month until they comply. And then if you don't comply, I guess it will be prison. Or if you don't pay the fine, it could be prison. Germany wants to bring in mandatory vaccinations. There's riots going on there. So the more you bring in restrictions, the more business is going to be affected. People are going to be out less. London is very quiet on the streets, to be honest. So people are out less. They're not going out spending money. They're nervous. It doesn't create a very feel-good feeling, does it? It doesn't create the right atmosphere for having a good Christmas and getting out and doing lots of shopping. So I'll be interested to see what happens there. But stock markets have certainly been volatile. They've recovered slightly, then they've gone down a bit today. I don't know how they will end today, but it's been a little bit choppy. Some shares have gone down quite fast. I mean, the airline shares and travel and that sort of thing has gone down. America is starting to introduce, or possibly will introduce, restrictions on people traveling within the country. They must be vaccinated to travel interstate. That's interesting. Inflation. We talked about this in the last few months. Now, the retail prices index in the UK has hit 6%. Now, that's different from the other way of measuring inflation. Retail price index is the RPI, which is the traditional way of measuring inflation. That's been around since the 1940s. But they brought in a new measure, which is always lower than RPI, called the CPI, Consumer Prices Index, and that stands at 4.2%. So on the old measure, the old way of measuring things, inflation is actually at 6%. So that means that your money is devaluing by 6% a year. So every £100 you have will buy £94 next year based on the current rate of inflation. And we're seeing this all over Europe. We're seeing it in America as well. Some countries like South Korea have introduced interest rate rises. So we'll have to see. Most of us know that prices are rising much faster than even the 6% RPI and the official rates. Fuel prices have gone up enormously, and natural gas prices for heating. For some people are going to be paying double for their fuel prices, their fuel costs this year compared to next year, if they've happened to be unlucky enough to not be in a fixed rate deal, or their fixed rates ran out just now and they have to renew it. And they're finding that they've been quoted double the prices. Average prices can be around last year, were about £800 to £900 a year. Now they've been quoted £1,700 per year for the same thing. So we're seeing things change. So we know that raw materials in building and for restaurants and that's gone up a lot more than the official 6% or 4.2%, and that's the same in America as well. So they're kind of, I don't really trust these figures. Could interest rates rise in the UK? Well, the Bank of England's Monetary Policy Committee meets on the 16th of December, and there's been strong rumours that there could be a rise of maybe 0.25%. We don't know. If that happens, then I would expect stock markets to fall, but we don't know what will happen. So, look, the important thing is financial education is your best investment. So the key to building wealth and keeping wealth. So never stop learning. Do keep watching my free podcast, listening on iTunes, watching on YouTube channel. Keep checking those things out. And I cover financial education in my book, Yes, Money Can Buy You Happiness. I've got a new book coming out very shortly, which you can order on Amazon. And if you're interested in property, in conjunction with friends of mine, a company, there is a free property web class, so you can sit at home on the evening of 8th of December. It's a great web class. I always tune in on these because I can always learn a lot from these things. It's going to be 120 minutes of content, not fluff. So it will be education, how to invest in buy-to-let properties, raise finance, and build a property portfolio that could see you into your retirement. A lot of people haven't got proper pensions nowadays, so that's why they're turning to property. You'll learn proven property investment strategies, guided through the best way of buying cash flow properties, learning how unlimited finance is available, not necessarily for mortgages or banks, learning how you can buy properties without even using your own money. So look at that. You can earn 10% income with only 10% of your personal time. So look at that. Look at ways you can do this. It's certainly it's been very good for me over the years. So click to join if you're interested in that. Absolutely free. I think it's very worth well spending your time on a Tuesday when you would otherwise be watching Netflix or whatever. Click to join that right now. Thanks very much for listening, and I'll see you soon. Bye for now.